Right. Good day, everyone. Welcome to another edition of performance management. In today's class, we shall just talk about the D and E part of this question that we are trying to solve, right? D and E. So this D and E will just, I think it can take us more than 5 minutes. We are done so that we can move forward. Please, someone should send November 2018 Pathfinder question 2. That is where we will treat today. That is what we'll treat today. November 2018, question 2. That is transfer pricing opportunity cost. The transfer pricing policy is based on opportunity cost. Please, someone should assist us with that. All right. Okay, that's fine. So the D part of this question says that discuss the potential implication for TLC of outsourcing the production of one type of component that is manufactured. Class, when you are outsourcing, what is the implication of outsourcing? You are producing, have you ever hear about probably Pepsi outsource their key components that they use in manufacturing it? You can't say it. There is always an implication when you outsource. There is always what? An implication to, and this is just 4 marks. That is, it is required for you to list 4, right? So that you earn your 1 marks, right? Now, what is the implication? Discuss the potential implication. The potential implication of outsourcing is that one of them is that the suppliers may not supply a quality component. That is one of the implications. Discuss the potential implications for outsourcing, right? What is the implication? Now, this implication could be that probably we want to get a quality product. There should be adequate assurance that the quality is not what? Compromised. So you can, if, because if you didn't talk to your suppliers very well, they could what? Compromise the quality. Now, another thing is that it allows each party to focus on core competencies, which should lead to improved quality and low cost. Now, what this means is that the potential implication is that one of the divisions would do what? Would focus on its key areas instead of want to do, just like you have an experience in software, then you want to diversify. You want to move out from there. You want to move out from the software to another place, right? So the implication is that when you are outsourcing, right? I think it's positive. When you are outsourcing, it makes you focus on your key areas of competencies. But there is always a negative impact because when you outsource, you will open a door or you will give rooms for competitions, right? Have you ever, yeah, anywhere that what is it called? Pepsi or Coca-Cola outsource their key component that they use to produce it. If they tried it, a lot of people will come into the market, right? And where is Monty Dew today, right? Now, another thing is that it will result in spare capacity at the company. What is spare capacity? Right? You you have you what is it called? We could say spare capacity. You have the capacity to produce what is it called? More quality products, right? So instead of focusing on you want to do everything. You want to do everything, right? Now, the the price, why do you have to do that? The price at which the external suppliers is willing to supply may be kind of lower than what your fellow division will supply to you. So that could lead to outsourcing, right? And that is 4 marks. E, explain to TLC management what is triple bottom line reporting. Triple bottom line reporting means that it is a reporting framework that is what that goes beyond financial reporting. That is what triple bottom what line reporting class. Anything that is it is beyond. They are telling you that you are explaining to the management that it is not only financials. One, you need to talk about the sustainability. You need to talk about the social and the environment at which the company is situated. So everything is not all about, is the environment friendly, right? Social economy. You need to talk about the economy, not only the financials. What is the sustainability? Your ability to produce something without affecting people around you, without affecting those people who, your neighbors, right? So it is beyond accounting, it is beyond financial, and that is what triple bottom line what reporting. Having explained this, we shall continue with our calculation, or we will move to the next calculation on transfer pricing. I'm supposed to treat this, but I will leave it. Don't forget we have to solve 5 questions under transfer pricing. 2 is gone tonight. 1 will also be gone tonight, right? Then we have what? We have 2. Now, class, I'm supposed to solve this question, but let me keep it till the end of transfer pricing. Now, please check November 2018 question 2. Are we there? I need to confirm that. Are we there? Someone should send it to the platform. I'm waiting. I'm waiting. Don't send the image, please, so that I can zoom it. Right? Just send the just send the what is it called? The PDF. Uh, I would prefer the PDF, right? I would prefer the PDF so that I can. So I'm waiting. I'm waiting for the PDF, please. November 2018, question 2. Class, are we there? I'm waiting. So, Abba now. What is happening? Okay, let me look for it by myself now. Since you guys don't want to give me the November, I'll search for it. Hmm.
Sir, someone has already sent the question to the group.
Oh, so, when will no answer me now? Say, let me do it by myself. Okay. Let's see. It's not doing it for saving. I want to save it. I have to share my entire screen. Let me save it so that it will. Let me save it. Do we have anyone that have question for me? If you have question, you can unmute your mic and ask your question. Right. If you have question, I believe most of you have checked the previous lecture on transfer pricing, right? Why I'm taking it like this is because I want you to see transfer pricing. When you see it, either your compulsory question or 15 marks question, you should be able to like attempt it very well. That is why we have to do more questions in transfer pricing. And it's very simple. Just understand the principle. I always believe in principle. Even if I may not, I may come to, what is happening? This thing is not working. Oh, God. So I have to, what is this now? November 20th. Oh, okay. I'm actually finding it difficult here. So, Bridget,
Sir, good
am
evening,
I
sir.
safe? Good evening. Am I safe?
Yes, sir, you're safe. I just wanted to ask a question.
Okay, go ahead.
Is on one of these questions of Abibola Enterprise.
Okay, go ahead.
Where I'm confused is that eternal sales, the 65 naira times 20 units. So I'm confused on how we got that 65 naira.
I don't understand. Did you check the workings? That is the
Yes,
first
I did.
question.
I did.
Did you listen to the video? Did you watch the video from the beginning to the end again? And you did not see where we get that 65.
I did watch the video again, but maybe
So,
I can watch it tomorrow. Uh,
mhm. Mm. Go and watch it. Even me,
Okay.
I can't even remember self until you watch it and you come back and tell me that yes, do you
All
get?
right. All right, sir.
So it's very simple. Just watch the video. You understand it. You understand it. There's nothing there.
All right.
Yeah, well done, well done. So whichever way, just send message to the general platform. I will respond. Okay. Any other question, please? I'm trying to. I would have even checked for this thing by myself. I don't know why I have to wait in this car. I don't know why I have to. I seriously don't know. Oh, time is going. Seriously. So I need to share my entire screen. Let me share my entire screen. Okay, confirm if you can see my screen. Please confirm.
Yes.
Okay, that's fine. It's fine. Okay, question two. Look at this question. Ican from Ican Pathfinder, November 2018. Please let's pay attention, right? If you have question, right, just let me know, okay? Very simple. PM is very simple, okay? If you have question, just let me know. Okay, I will definitely respond to it. Babalola, Babalola, I guess it's a mistake. Okay.
No, 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 no. Did I raise up my hands?
Yes,
Oh, sorry, it's a mistake.
that's fine. Now, required. Calculate the profit for each division if the external demand per period for the components that are made by S division is this. Calculate the profits. Calculate the profits for each of for each division. If the external demand per period, if the external demand per period for the components that are made by X. So which means that if this is demand externally, we need to calculate the profit for each of the division, right? This is 13 marks. This is what 13 marks. The B part of this question says that calculate the financial impact on the group if Y division ignored the transfer pricing policy and purchase the 20,000 components that it needs from an external supplier for 170 naira each, right? So they want to kind of outsource. So it means that division Y ignored the transfer pricing policy and he went to the market, look for his suppliers that will supply it at the rate of 170 naira per unit. Now, per component, sorry. Your answer must consider the impact at each of the three levels of demand, right? 15,000, 19,000, and 35,000. From external customers for the component manufactured by X. This is 3 marks. Explain two attributes of a good transfer pricing. Who can give me what are the two attributes of two transfer pricing? Who can give me two attributes of two transfer pricing?
Fairness and good congress.
Okay, that's fine. Excuse me. That's fine. You need to explain those two, right? The mention is 1 marks. The explanation is 1 mark. That is 4 marks. Now, X and Y divisions are two arms of the XY group of companies. X division manufacture one type of component which it sells to external customer and also to Y division class. S is the selling division. Establish that first. Who is the selling division and who is the buying division? S is the what? Is the excuse me. Is the what? Is the selling division. X we manufacture, we sell for the external and also to Y. So we sell to external and Y. S is the selling division, Y is the buying division. Now, the next thing is to look for the policy for the transfer pricing. Don't forget all this. It's very important, right? The following information relate to S division, which is the selling division, market price per component, 200 naira per component, variable cost per component, 105 per component, fixed cost 1,375,000 per period. Don't forget, don't give yourself unnecessary headache when the numbers of period is not mentioned. It wasn't stated that it is for 2 months. It wasn't stated anything. Just leave it like that and move ahead, please. We've talked about this before now. Demand for Y division. Y division, which is the buying division, we demand 20 components per period. While the capacity for S division is 35 components. X, excuse me, X has the capacity for 35 components, right? 35 what? 35 components, of which the Y division will request for 20 components. There is something special here. We'll get there. Y division, which is the buying division, assembles another type of product. Class, assembles another type of product, which it sells to external customers. What it means is that division Y will buy a component from division X and assemble it to another product and sell to an external customer. It's just like I want to produce beans, right? I want to produce beans. I don't have the components that I will use to produce these beans. I meet Clementina, right? Clementina have these components. Now, Clementina, give me the components so that I can use to do what? To manufacture the what? To produce or to manufacture my own product and sell to an external what? Customer. The question is, how many components did I need from Clementina? How many components did I need? Because if I want to go and meet, I will tell her, okay, give me this component that I will use to produce this. So how many components did I need? Now, each unit of the product requires 2 of the components that are manufactured by X class. Each unit, for me to produce that unit, for me to produce 1 unit, I will need 2 components that I will use to process this. I will use 2 components for 1 unit. Class, 2 components for 1 unit. The question is, how many units did I want to produce? Because if I meet Clementina now, right, or AA, right? If I meet AA now, AA, how many components did you need? Oh, okay, you will calculate it. Okay, I need 2 components per unit. For you to produce 20,000 units, for instance, for you to produce 10,000 units or 20,000 units, you need 2 components for each unit class. Now, the following information relates to Y division, which is the Y division, the buying division, selling price. Y division will sell at 800 per unit. You can see that here they use units. In the selling division, it is components, right? It is what? It is components. 2 components from X, 2 are transfer price. 2 components, which means that it has already been stated that if I want to produce 1 unit, I will need 2 components, right? Other variable cost per unit, the fixed cost, the demand is what? Is 10. Now, don't forget, in this side, we're told that what happened here, right? We were told that division, we were told that demand from Y division. Y division, we need what? We need 20 components. Class, Y division, we need 20 components to produce how many units? Class. Now, don't forget, you now have demand here. Now, how did they arrive at these 10,000 units? Class, how did they arrive at these 10,000 units? If you will need two components to produce one unit, right? To produce what? One unit. So definitely they need 10,000 components, right? They need 10,000 components to produce 10,000 units. They need what? 10,000 components because 10 times 2 is 20, right? For them to produce 10,000 units, for Y to produce 10,000 units, it needs 20 components. The question is, how do they arrive at 20 components? 2 components for 1 unit. And you demand, or your capacity is 10,000 units. Your capacity is 10,000 units. Then you sell to external 10,000 units. So which means that your 10,000 capacity, for you to produce 10,000 units, you will need 2 components for 1 unit. 2 times 10 will gives you the 20 components that you will use to process the 10,000 units. Class, am I communicating?
Yes, sir.
Are we good? I need to confirm that. Are we good? Unmute your mic.
Yes, sir.
Okay. If this is established, and that is why how they arrive at 20,000 components.
Yes, we are good.
Now we move ahead, right? We move. What is the policy? That is the next thing you should ask yourself. When you have identified the selling division, the buying division, you've analyzed the capacity and the demand. The next thing you should ask yourself is, what is the transfer pricing policy? The question is, the transfer pricing policy is based on opportunity cost. What is opportunity cost? What you forgone. Don't forget, under the second scenario, the general rules given to you, when you don't have enough capacity, you transfer based on the marginal cost as well as the contribution lost. So when you are transferring based on opportunity cost, it means that the unit, the selling price, the contribution that you lost from outside, you forgone, you will add it to the cost in transferring to the internal division. And that is what the concept of opportunity cost. Class, if you pay attention to our previous lecture and even this class, you will understand the concept, right? Very simple. Y must buy the component from X. Y must buy from X. What is the Y? Y is the buying division. X is the selling division. Calculate the profits for each division. So we need to calculate the profit for each division. If the external demand per period for the components that are made by X is this. So we need to determine the profit for each of the division under the external demand from X. X is the what? Is the selling division. Class, this is 13 marks. Okay. Suggested solution. Suggested solution. Please make sure you are with your writing material, right? So, suggested solution. I just need to copy so that make things work easy for me, right? Division X A. Division X right? What is this now? Division X and division Y. Who is the buying division and who is the selling division? Division X is the selling division. Anyone can come first, right? Division X. And don't forget, it is placed under different heading, right? Okay. Now let's start. They say for each of the what? For each of the divisions, statement of profit or loss for division, because of the headings, division X. Division X, don't forget it is divided into how many capacity? Someone should, okay, it is divided into how many capacity? The first one is how many units?
15 units.
15,000 15,000 components. 15,000 components.
19,000 components.
19,000 components, because they say you should show, we should show it on different, on these headings, right? Then next, what next?
25,000 components.
25,000 components. So just a minute. I need to arrange this part right. 25,000 components. 25,000 components. 25,000 components. Okay.
It's
So
35,000.
35,000 components. Thank you.
And sir, you didn't change the name of the company.
Okay, what is the name of the company? XY, right?
That's why Group.
Thank you. SY Group. Thanks for the observation. Can you see my presentation? Please present your work this way. Please, all these things are 1 marks, 1 marks, 1 marks. Please. Now, workings. So let's start. We have division X is which division? Is the selling division. You know, they say it is for each of the division. We are starting with division X because of this component that is being given to us. We should place it under these 3 components, right? So in this case, this is the selling division. So we can have internal sales, and don't forget it is an opportunity cost. 1. Then Y must buy from what? Y must buy from division X, which means that we need, first, it is an opportunity cost. Don't forget, marginal cost plus contribution lost. What is the contribution lost? Contribution lost means that the amount that instead of me to sell everything externally, I take it internally. So the amount that I actually lost on that particular transaction, contribution, your sales minus your variable cost, right? Plus the variable cost that you will transfer will become the opportunity cost. So you are transferring it to division, to the buying division based on opportunity cost, that 2 cost. because there is no spare capacity, right? You don't have enough what capacity, right? And Y must buy. So we must satisfy Y first before the what? Before the external, right? So uh our workings, please, when it is 5 minutes to end this call, please let me know so I can create another link, right? So please, thank you. Workings, you can start with work one because internal sales force is that also. Then don't forget this is the division X is the selling division. This is external sales, right? This is work one at 15,000 capacity at 15,000 components. Now 15,000 components. Should I say okay? Okay, capacity. What is the capacity for the selling division? The selling division, which is division X, have the capacity to assemble to for 35,000 components. 35,000 components. Class, please pay attention. 35,000 components. 35,000 components. Then you must satisfy internal first. So the reason why it's like that is because of that opportunity cost. Okay, satisfy the internal before the external. Then the selling division will now say, oh, yeah, now it is based on opportunity cost, right? That is the policy actually, not from the divisional manager. So internal demand. So internal with demand from Y. Can you see it? 20,000 components. Ican may decide to lock this question and they will not give you, right? They will not give you the demand from Y. Then you will not use your own initiative, right? To do what? To get these 20,000 components. You already be told that they have the capacity to produce 10,000 components and 10,000 units. Before they can be able to produce 10,000 units, they will need some components. That is why they say Y division assembles another type of product which sells to external. Each unit of that product requires 2 of the components. So which means that for them to even sell, they will demand for 2 units, two components. From what? 2 components for 1 unit from division Y, from division X, right? And they have the capacity to produce 10,000 units. So which means that if they want to assemble this product, class, 2 components for 1 unit, 2 times 10 is 20 components. Ican may decide to lock this question and you will start looking for, oh, where is the demand? Where is the internal demand? Where is the internal demand? You have to do what? Pay attention. Read the question and understand first. Right? Now, if this is established, class, we move, internal demand is 20,000 components. 20,000 components. Now, if you remove the 35,000 components from 10,000 components, how many components do we have? How many components do we have? Class.
15,000 components.
15,000 components. Right? So this is what is available to external. This is what is available for external. Now, how many units? External is now demanding for, don't forget, this is the external demand. 15,000 components. This is the external demand, 15,000, 19,000, 35,000 components. Class, look at it. Let me show you. Coming. Can you see it? Calculate the profit for each division if the external demand per period for the components. These are the external demand. So we can have external demand. You can satisfy it. External demand is 15. Can satisfy it because there is enough capacity here, right? So this minus this we give new, right? We can have new here. Class. If in this case the selling division can satisfy the external demand, so there is no contribution lost here. The selling division is not losing anything here. Why? Because the available is now 15,000 components after satisfying the internal, right? Then the external demand is 15, so there is no contribution. I'm not losing anything here. So therefore, the transfer price will only be based on variable cost. Variable what? Times the variable cost of the selling division. Class. The transfer price will only be based on the variable cost because division, the selling division is not losing anything here because the available is 15,000 components. The external demand is 15,000 components. So it can satisfy the external demand. Class. So the transfer price is, should I multiply direct or should I should copy it again? Okay, let me just copy this. Okay. Transfer price times, so what is the variable cost of the selling division? Don't forget, what is the variable cost of the selling division? You only have 250. Oh, it's not 250, sorry. You have what? 105 per component, class. 105 per component. You may have material labor. Just add all the variable costs per component together, right? So this is 105 per component. Per component. So when you multiply, what is the transfer price, class? What is the figure for the transfer price?
Two
What is the
million one
figure?
hundred thousand.
What is happening now? This class is too dull. What happened now? What is happening? Just to give figure, we are wasting time. Okay, what do we have quickly?
2,100,000.
2,100,000. 2,100,000. Okay, so this is the internal transfer price, internal sales. This will be work one for 15,000 components because we still have a lot of things to do. So please, figures, I will need figures, please. This is for 15,000 components. We'll do the same thing for which components? 19,000 components. So I can copy this. 19,000 components, right? What is the internal demand? Still remain this. Oh, I need to copy the capacity altogether. Okay, 19,000 components. The capacity is, when you subtract, what do you have? Available still remain 15,000 components. Available for external still remain 15,000 components. Then what is the external demand? External demand. External demand, this is the external demand, the 19,000 components. Can you see it? Class, are we still together?
Yes, sir.
Yes, sir. Yes, sir.
What? Anything? Okay. So the external demand is 19,000 components. So which means that the selling division cannot satisfy the external. So on this now, the selling division will lose that contribution that he lost as a result of not satisfying the external, right? Plus the marginal cost, which is the variable cost, will result to the opportunity cost. So therefore, the external demand is 19. Is 19. So how many components lost? How many components? That
4,000.
with 4,000. We're not able to meet up. Then we have 4,000 that remain, right? The 4,000 we have here, right? So in this case now, I will give the external 15 because there's no enough capacity. I will give the external the 15 class. I will give the what? The external 15. No, I'm supposed to, sorry. The first one that I did, I'm supposed to do the external too. Oh, let me just put it here. External demand. Sorry about that. External demand. So we're able to meet up with the 15 components. 15 components times, what is the selling price that the selling division will sell?
200 naira.
200 naira per component. 200 naira per component. So what is the price? What is the sales? What is the sales? Internal, let me say internal sales, not demand. This is external sales, not demand. What do you have?
That's 3 million.
3 million.
3 million. So we can go back and still on the same working, 3 million. Okay, thank you. So we come back to this part. Now, the external, we were not able to satisfy the external. Is that not so? We are left with what? 4,000 components. You see this 4,000 component? It will form the contribution loss because the selling division is losing money on this 4,000. And what is the contribution loss? It is the selling price minus the variable cost. We give you a contribution per unit times the 4,000 components. Right? Please, the person should should meet his or her mic now. Right? Times the selling price minus variable cost times which minus variable cost, which gives you the contribution times the 4,000 component lost plus the marginal costs, right? That will be the transfer price. So in this case now, we can come here and say transfer price internal sales, right? Internal sales 20,000 components satisfied, right? At variable costs of the selling division per component, what do you have? Then the contribution lost will be your selling price minus the variable costs. So what is the selling price of the selling division? What is the selling price of the selling division? Is 200. What is the variable cost of the selling division? Is 105. 200 minus 105 will give you what? The contribution, right? We give you what? Contribution minus 105 times, what did we lose? We lose 4,000 components because we were to supply the 019, but there is no enough capacity. No enough capacity, we decided to supply 15 to external. Then the remaining 4,000 will be the contribution lost. The internal division will pay for that because they have satisfied the internal in full. So times the 4,000 components. So when you multiply, what do you have? Figure. Hello? So the contribution lost, when you multiply, what do you have? Give me figure. Then the first one, when you multiply, what do you have? Quickly.
419,800.
The first one,
2,100,000.
just say 2 million. Which one? Is it the first one or the second one? I don't even
The
know.
first one, the first one.
2 million what?
100,000.
The second,
490,800.
4,
419,800.
419,800. So when you add this together, the two together, we give you the transfer price, give you the total internal sales. So add it. What do you have? When you add the two together, what do you have? Addition. Oh.
Two million 519,800.
2 million
591,800.
2 million 591.
One.
I think I can't hear you. Let's someone
Two
just
million 519,100.
hold on. I'm coming. Just hold on. 2 million. Sorry,
519
519
800.
800. Okay. Okay. So the next one is, what is the internal sales? External sales. External sales. External sales is 15,000 components. 15,000 components because of the capacity times the selling price, which is 200. What do you have?
3 million.
This is 3 million, right? So 2,518,000 plus the 3 million, right? At 19,000 capacity, this is 3 million. Then what will happen at what will happen at 19,000 capacity? What will happen at 15,000 capacity?
Hello.
Yeah, I'm with you.
Please, that 419,800. I'm having a different figure here. This is 380,000.
It's the figure that they gave me.
Let's confirm again, please. 200 minus 105. This will be 95 times 4,000, 380. Please, let's confirm again.
So when
Yeah,
you
that's
multiply what?
380,000.
I got 380,000.
So when you add this, what do you have?
2,480,000. 2,480,000.
So it's the figure that they gave me. I'm using. Ah, 2,480,000. So please, others should always confirm, right? So that we will not end up like this. I'm not with anything. It is what I know. Transfer pricing is what I know very well. So you just need to like, okay, this is this side we need to change this, and this side we need to change this. Please, 2,480,000. 480 what?
Thousand, yeah, 480,000.
Okay. Thousand. So the next capacity is 35,000. The next capacity is at, I can copy all this, at, we need to be very fast here, at 35,000 capacity, right? So available, external is demanding for 35, right? External is demanding for 35. Okay, and we have capacity for this, okay? So the difference is this. Please, the person should mute his or her mic, please. Mute your mic if you are not talking, please. Thank you. Now, can you see now that what is the external demand? External available for external is demanding for 35. But guess what? What is available now is 15,000 components. So which means that we cannot satisfy the whole 35,000 components. So there will be an opportunity cost here again, class. So in this case, we still bring it that external demand 35. We're not able to satisfy the 35 components. But what is the difference that we're not able to satisfy? What is the difference? What is the difference?
20,000.
20,000. Internal will pay for this. That is the contribution lost. Internal what? Internal division will pay for this. Therefore, transfer price internal sales right? They will satisfy the 20. Let me bring it. They will satisfy the 20. I just need to copy it. The 20. Then the contribution lost. Then the contribution loss will be the 20,000 sales. Oh, let me just bring it down. Class, I hope you are following.
Yes, sir.
So the contribution loss is 20. The 20,000 component that was not able to satisfy. So when you multiply, give me figure. When you multiply, give me figure.
1.9 million.
Okay. 1.9 million. The first one, right? 1.9 million. So when you add these two together, what do you have? Quickly, class, quickly.
That would be 4 million.
That would be for 4 million.
4 million, sir.
Okay, 4 million. That is the transfer price. The external sales. So we will only sell 15,000 components to external because of our capacity, right? 15,000 components as the selling price. 15,000 components. After this class, no more transfer pricing opportunity cost. I'm moving to another area of transfer price. There is no time, right? There's no time to waste. What do you have here? Quickly. Figure.
3 million.
3 million. So we have 4 million for internal and 3 million for external, right? You can never see it like this in your study. See, did you check the Pathfinder? Yeah. Class,
Very
I need to,
confusing.
yeah, very confusing. That
It's with
is
me.
that
It's
yes,
confusing.
yes, that is why next gen professionals, next gen, that is why we are different. We don't we make sure we simplify all our words, all the calculations for you to understand. Just we believe in understanding and principle. That is what we work, that is what we do. So please make sure you understand principle. Understand principle and ask question when necessary, right? And ask question at the right time, right? So we have the next is external sales. What is the external sales? What is the figure, sir? I think it's 3 million. 3 million. 3 million. Don't forget that internal sales will not affect. Add the 3 million together. What do you have? 3 million plus 3 million plus 3 million. Figure 8 million, right? Hello?
9 million,
Should be
9
9
million,
million.
Uh-huh.
9 million.
Uh-huh. Okay, we are done with this part, right? Don't forget this is the selling division. X first. So we have the total sales. The first one is 5,100,000. The second one is what? 5,480,000. The next one is what? 7 million. Why the group will have the 9 million? So the next thing is what? The cost, right? We have the variable cost, right? Variable cost, I can say less variable cost, right? The variable cost they use to produce each of the components. Class, you less variable cost that they use to produce each of the components. So let me, this is another workings, right? That is how stressful it is, but it's very simple. Should I do it inside? Um, okay, let's just look for a way around it. Okay. So what is the
Do it
variable cost per
among the
unit?
workings now.
You say? You can do
Sir,
it
do it
inside.
among the workings.
You can do it. You can do it. You can do it. Just do that one. 15,000. Thank you. Because of the stress of scoring up and down, you know. Mm. So what is the variable cost for the selling division? Is 105, right? So when you multiply, what do you have? When you multiply, what do you have? Quickly, figure.
1 million. Okay,
1,575,000.
sorry.
1,000,000,
575,000.
1,575,000. Next, so we can have the next is 19,000 components times 105. Figure
1,995,000.
1,995,000.
5,000.
The next is 35,000 components times 105. What do you have?
3,675,000.
3,000,000
675,000.
675. 3,675,000. I'm coming. What is the fixed cost given to us? Look at these people. What is the fixed cost given to us?
1,375,000 per
Fixed
period.
cost. Fixed cost per period, right?
Yes, sir.
What should we do? What should we do? Fixed cost per period. Fixed cost per period. Okay. Total cost, fixed cost per period, fixed cost per period. Fixed cost per period. How should we present this? So let's think about this together. How do we present this fixed cost per period? Hello, hello, class. Am I the
Yes,
only
sir.
one in this?
We are
Am I the
together.
only one in this class?
We are
No, we
together,
are not.
sir.
No, we are
No,
not.
we are together, sir.
No, no, no. So how do we present this? It's presentation that matters, right? So let's how do we present the fees cost? Okay, I think there's a mistake there. Oh, there's a mistake there. Sorry. Oh, and we keep multiplying. This is the external demand. Is that not so? This is the external demand. We need to multiply these things with the capacity. With the capacity. Don't forget the production. The capacity is 35. They will use the variable cost to produce that capacity of 35,000 components before they will give it out. I was like, this thing is not supposed to be like this, right? Right? So that is it. So let's just do it outside. Let's do something outside. Let's do a brief workings outside.
So I will be
Clementina.
correct then.
Clementina. I know you will talk. Walk two. Walk two. Walk two. Walk two. Walk two. Oh, walk two. Walk two. The capacity is 35,000 capacity, right? So we can have walk two. Variable cost. We can have, let's say, total variable cost. Variable cost. The total variable cost is 105 per component. Then the capacity to produce per component 35,000 component. Class, what is the component? What is the total? Then the next one is fixed cost. We can add it and bring it in. So what is the fixed cost? 137 something.
1,375,000.
1375. 1375,000. Right?
Total variable
So
three
what do you have?
million six seven five.
3
Three
million
million 675,000.
675,000. So when you add this, someone will come. So I don't know how we sometimes we are all both professional colleagues. So forget I'm taking you um performance management, right? Someone who will not be in class or you ask me question in my DM, which I've stated, I've said it several times. I've said this several times. You don't need to send it to the general platform. The person will not be in class, right? And that question will be, we have discussed this, we've mentioned this several times in class, and you want me to answer you. Imagine, are we being fair to ourselves? No. Yeah, I have over more than 1,000 students. So I will say, okay, because of you, I have to attend to you, attend to this, attend to this, attend to this. So sometimes please, we are both professional colleagues, right? We should also look at it that what if this person, what if this person? The best thing is that forward all your questions, please. Send it to the general platform. I will respond to it, right? I will respond to it. So when you add these two, what do you have, class? Addition. Quickly. Yeah, now figure
5,050,000.
Okay.
5,050,000.
50, no, 5,005,000.
050,000. We don't have enough
Yeah.
time, right? And 5,550,000. So we can bring it in as the total cost. Oh, 5,050,000. So someone should just assist us to just some deduct it from this. Okay, so what is the profit?
We
What is
have
the
three
profit?
million 950,000.
950,000. Next. Is it the first one?
No.
That figure is wrong. Oh.
Give us correct figures now.
Is 50,000.
50,000.
5,100,000 minus 5,050,000 is 50,000 remaining.
Next, quickly. Oh,
430,000.
430,000.
Yes.
Next,
1950. 1950.
1950.
1,950,000.
Then
So what is the
000.
group? What is the
The group
group?
is
That's
3,950,000.
okay.
3,950,000.
3,950.
Okay, this is the profit for the selling division, right? Don't forget the question says profit for each of the division. For each of the division, right? For what? For each of the division. So I can copy this all through. The first one is the selling division. The second one will be the what? The buying division. So please present your work. This is why, right? Now, don't forget that in the selling division, in the buying division, you will only have external sales, right? What 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 is it called? What the buying division buys from what? Buys from the group. Buy from the what? Buys from the group, right? Is that not so? And don't forget, it is 20,000 components. It is what? 20,000 components, class. So we can have 20,000 components, right? And it will sell it outside. Division Y will sell it outside at what? 800 naira. Can you see it? 800 naira. That is the market price that the division Y will sell it outside. 800 what? Please, the person should mute his or her mic, please. If you're not talking, mute your mic, please. So what is the external sales? When you multiply, what do you have? Ah, figure.
16 million.
15 million.
16.
Okay. So we put it to all the components, 16 million. So this, is this 16 million?
Yes.
Okay, okay. Sorry. Is it components? You see, they will sell outside. Demand, is it not 10,000 units? They will buy component from the selling division and sell it. They will buy the components, they will process it, they will assemble it. It becomes a product. They will now sell it outside. You cannot sell that component. You have to convert it to units, to something. That is 10,000 units. And everybody say yes. Okay, oh, units. What do you have? Figure. Quickly, please.
8 million.
Okay, 8 million. So
8 million.
So we can put it all through that this is 8 million because they have to satisfy. Okay, 8 million, 8 million. Okay, it will affect the group. What is the group? When you multiply, what do you have?
24 million.
24 million. Honestly, this class is too dull. Honestly, I don't know what is happening. Just you are with your calculator. Press calculator, give figures so that we can move ahead. So if this is the sales, right? This will be the what? The total sales, right? This will be the total sales. You guys don't know that sometimes it's tiring when you say figure, and somehow. So this is the total sales. What will be the variable costs that you incur as a result of the 10,000 units? Variable costs. What is the variable cost of the buying division? The variable cost of the buying division is what? 250. 10,000 units produced times 250. So what is the figure?
2.5 million.
Yes, sir.
2.5.
Yes.
Coming. 2.5 million. $2.5 million. So what is the total when you multiply? What do you have? When you multiply it, what do you have here? The group. When you add
7.5.
it, what do you have?
7.5 million.
7.5. Okay, that's fine. Okay. So what is the fixed cost? Fixed costs. You can actually do it the same way you did the other one.
900,000.
Is it 900,000? Let's confirm.
Yes, it's
Okay.
correct.
Okay, the fixed cost is 900,000. That's fine. Whichever way you want to do your total costs, do it, get your figure, and you move on. 900,000. So what is the total?
2.7 million.
2.7. So what is the buying division profit? Sorry. What is the profit? The profit.
4.6 million. The first
Okay,
one.
the first one is 4.6.
Yes.
They are all 4.6.
Yeah, 4.6, 4.6.
4.6. 4.6. Oh, we did not add, you see, that is why it is always advisable, right? It is always advisable when it comes to your costs, you should always bring in the internal transfer sales. Internal. It will become the sales revenue to the selling division, right? It becomes cost to the buying division. Please, the person should mute his mic now. If you are not talking, mute your mic. Internal transfer. Please always bring this internal transfer first. I forgot to. Can you see it? I just forgot now. Please. Internal transfer. We'll bring in all this, right? 2.1. Forget. You bring it first so that you will not forget. Because it's very what? Very important. Please. It becomes costs to the buying division because the selling division will transfer to the selling division. It becomes revenue to the selling division, while the buying division becomes what? Cost. So what is the cost again?
The profit now is
Profit
2.5.
2.5. Next.
2120 million. 2 million
You said
160 million.
2.
2 million 160,000.
Okay, 120,000. Next.
600,000.
600,000. Next.
4,800,000.
Okay, 1 million.
4,800,000.
4,800,000. 4,800,000. Okay, that is the profit, right? 4,800,000. Now, what's next? What is the next required from this question? We are done with this, and this is 13 marks, right? We are done with this, and this is 13 marks. What next? The B part of this question before we go. Calculate the financial impact on the group if Y division ignore the transfer pricing policy, which means that Y division, which is the buying division, we say no, we want to ignore the opportunity cost and purchase the 20 components. Then Y division will go out to buy the 20 components outside that needs from the what? From the external. You will now go outside and buy it at what? 170. Whereas the internal is doing it based on opportunity cost. Now, your answer must consider the impact at each of the 3 levels of demand. So, which means that the from the external customers for the component manufactured by S division. This is 3 marks. So this means that you don't need to satisfy internal first. Class. It means that you don't need to do what? You don't need to satisfy internal first. You don't need to do that because now there is an external supply. The selling division, the buying division can go out and buy. Is that not so? The selling division can do what? Can go out and do what? And buy. Because what does this, what is the policy now? Ignore the transfer pricing policy and purchase the whole 20,000. So they want to purchase everything outside, not even half. The 20,000 components outside that it needs for the what? So we need to do that, right? B. Before we go, B, right? So there is no, in this part, we will not have transfer should be based on opportunity cost or not. So it will be the normal, right? So SY SY. So B part says that the B part of this question, calculate the financial impact on the group if Y division ignore the transfer pricing policy, right? So it does not want to do it like that. We want to purchase all the 20,000 components outside. So there will not be internal what? Internal transfer. So the external transfer, Y division, why we get everything outside. So that is why I need to start from this part, right? Since it is Y, right? Is that Clementina?
Yes, sir. Sorry, sir. The division Y, the group is 30,800, not the figure that is there.
Okay. What will be the financial impact on the group if Y decided that you want to get everything outside? I don't want to buy from internal, right? Right? Now, what will be the financial impact on the group? It's very simple. So there will not be internal transfer. So just copy all these things. Then we'll arrange it. So there will not be what? No internal transfer. So there will not be any cost attached to what? To the what? To the buying division. Because the buying division, we get everything outside. We get everything, the 20,000 component that we use to what? To produce 10,000 what? 10,000 units. Right? So there will not be what? Internal transfer. So in this case now, instead of this internal transfer, don't forget, they will get it from a suppliers outside. And what is the cost of the supplier? 170 something, right? So in this case, we can say internal supplier, abi suppliers, right? You get it at what? The 20,000 components, 20,000 components, 20,000 components times, now they will get it at what? So don't forget, what is the financial impact, right? What would be the financial impact if Y decide that we ignore the transfer pricing policy? Class. So external suppliers, 170, right? 170. So if I multiply, what do you have? Oh, quickly, class, quickly. When you multiply this, what do you have?
3 million
3.4,
Okay, 3 million
400,000.
400,000.
400,000. Oh, my system. That's why I say you should call figure so that we can, but it's fine. 3 million. Okay, so when you add it, what is the group? Quickly, what is the group? What is
10
the
million,
group?
200,000.
10 million,
200,000.
300,000. 200 or 300?
200.
200.
Okay, that's fine. Okay, right. The only thing that will change is this transfer. Is that not so? There will not be internal transfer. But you have the external because you have to purchase it outside. Now, the variable cost that you will use to process it still remain the same. The fixed cost will still remain the same. So in this case, what will be the financial impact? Which means what will be the profit on the group? So with this now, you can give me figure. The variable cost will still remain 10,000 unit times. Don't forget, this is what they want to get outside. That is why it is component. They're supposed to get it inside, but they say, oh no, what will be the financial impact if I decide to get it what? Outside. So class, what is the profit? Quickly. What is the profit?
1,200,000.
Okay, 1,200,000.
200,000.
Please, others, please confirm that if it is 1,200,000.
1,200,000.
Okay, next.
1,200,000.
1,200,000.
200,000.
1,200,000. Okay, next. What do you have next?
It's still 1,200,000.
Okay, I'm coming. That's fine. So what is the group?
3,600,000. 600.
3,600,000. 3,600,000. Okay. Let's check it again if I'm not missing something up. Okay. This is the component. Right. The component will still remain the same. The component will remain the same. The external sales, they will still make an external sales of 800. After making an external sales of 800, okay, I'm coming. 3.6, right? 3.6. 3.6. Okay, I think this should be class. Are we still together? Hello, class.
Yes, sir.
Okay. So if there is anything we need to adjust here, probably when we come on Sunday, I'll check it again. But I feel okay, this is just it is what it is, class. It is what it is. So the person should unmute your his or her mic quickly. Unmute your mic. Unmute your mic, Ibrahim Said.
Hello?
Okay, I'm with you.
I think for that question B, The question says that calculate the financial impact on the group if Y division ignore transfer pricing policy and purchase the 20,000 components that need from external supplier for 170,000. Now, but from the what is the from the solution provided, I'm still seeing that 8,800 uh units multiplied by 10,000, making 8 million. Does it supposed to see it there?
So why did you feel it's not supposed to be there? Why?
Why I say it's not supposed to be there? It's another question entirely. A kind of
Mm-hmm.
is
I don't want to do it the way it is in the study. I don't want to do it like that. They said, what is the financial impact? Now,
okay.
you should have start from okay, the external sales. Of course, they will sell to external,
Yeah.
right? Of course, they will supply. They will get suppliers outside. Is that not so? They will get supply outside. Is that not so? Now, instead of that, they will incur variable costs as well as fixed costs. What will be the impact? We want to know is the group, is it increasing the group profit? Is it going to increase or not? Right? However, your point is what is noted.
All right.
Thank you so
Hello,
much.
can you hear me?
Yeah, I can hear you.
All right. What I noticed is that I think the question is just referring. The question is referring to the difference, like the financial impact of we not selling to the division Y and the division Y buying from outside. So I think we need to just compare the the transfer prices, the transfer pricing from the division X to division Y, and the cost of division Y in, purchasing it from external, and look at the difference. Is it higher or lower? So I think we just need to like get the purchase price that division Y is getting from external and compare it to the transfer price that division X is selling to division Y and see the financial impact to the company, to the group. So what we are supposed to do is just that the purchase price is 3,400,000 naira for each component that division Y is getting from the external, and the transfer price is from division X is 2,100,000 for the first 15,000 components. That will give us the difference of 1,000,000
Hello. I will not do it like that. You said, from your words, you said, I'm supposed to do it like this. Is that not so? As far as I'm concerned, it will not go like that. Do you know what I will do? That is why, that is why we are next gen. Just keep your finger crossed and see what I will do now. Now, let's copy this. Let's do for Y. No, we would need to do for X. Right? Bro, I'm sorry. I won't do it that way, but I will do it in another method. So we'll calculate for X, right? Now let's do for Y. No, Control Z. Control Z. Okay, let's do for Y the same thing. We've calculated for Y, right? Where is X? Quickly, my system is still okay. So let's just copy this out for Y. Is that not so? What will be the financial impact? You will see the financial impact. Don't worry. X. So in this case now, right? So there's no internal sales anymore. Is that not so? No internal sales. And if there is no internal sales, what will happen? So it means that we are to sell the whole 15,000 components. We are to sell the whole 19,000 components. Then we are to sell the whole what? 35,000 components. Class. We will look at it together. What will be the financial impact? What is the difference between the two profits? That is what I will use. Class, am I communicating? Don't worry. What we will do? What we will do is very simple. We will calculate the profit based on this without internal transfer. We will also calculate the profit of X without internal transfer on the basis that they need to satisfy the external of 15,000 components, 19,000 components, and 35,000 components. Then the profit will now be comparable when there is no transfer price internally. Then you can now use it to make your decision. You will now see that that figure you see in your study pack, in your past question, right, will still arrive at the same thing. That is why I don't like stating the year, right? We always assume that the way they solve it, we should always do it like that. No, 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 no. It's not supposed to be. That is why it is always good to understand. They said, what is the financial impact? What I will just do is that I will just say, okay, when there is no transfer price internally, right? Then I will use the second one when there is what? When there is no transfer price as well. Everybody, the buying division want to buy everything externally. The selling division will sell all internally, right? Which means that these figures will still change. Is that not so? Which means that all these figures here will change, right? Which means that all these figures here what will change. We need to do what? Calculate our what? The total cost as well, which is the variable cost, as well as the fixed cost. So when we come back in our next class, which is Sunday, I will do justice to that so that we can quickly what? We can quickly compare, then we do what? Then we move on. Ibrahim, quickly.
Sir, it's not that I'm looking at the first question or something. I'm just thinking that if we can compare the cost of we buying from outside, because division Y is under the group. So we are focusing on division Y here. So if we should look at the cost of us buying from outside and comparing the cost of us getting it internally, and we compare both of them, it's also financial constraint, like financial uh, issue for us. So that's just what I'm saying. It's just that I'm using the basis of the cost. But if you want us to use the profit also, it makes sense. But I'm coming from the cost basis.
Okay, that's fine. That's fine. That makes sense. Well done. That makes sense. So we'll compare the two. We'll compare the two methods. Based on the cost price as well as based on based on comparing the profits, right? Using the full cost when they are satisfied and when they are not satisfied, right? That makes sense. Ibrahim, well done. I like that you're thinking, right? It is noticeable. It is not that it is ignore. No, it is not, right? We should, as well, always, what I'm saying is that we should always look for alternative, right? When the desirable is not available, the available becomes the desirable, and that is how it should be. All right. So in this case,